Jesse Livermore, the boy plunger, wasn't born on Wall Street. He started as a 14-year-old quoting stock prices in Boston. He loved the numbers, the thrill of the game. He saw patterns, understood the rhythm of the market. It wasn't just numbers, it was human behavior in its rawest form. He started small, placing bets at bucket shops. These weren't the grand halls of the New York Stock Exchange, but they were his training ground. He learned to read the tape, to anticipate the crowd's next move. Wins and losses were his teachers. Each trade etched valuable lessons in his mind. By 21, he'd made his first fortune, then lost it. This was a recurring theme in Livermore's life. He wasn't afraid of taking risks, of going against the grain. He saw opportunities where others saw chaos. He was a master of reading the market's mood, its fear and its greed. He wasn't always right, but he learned from every mistake. He understood that trading wasn't just about numbers, but about understanding human psychology. It was about controlling your emotions, being disciplined, and knowing when to walk away. Livermore's name became synonymous with market crashes. He made millions shorting the 1907 market. He saw the writing on the wall, the unsustainable speculation, the impending panic. While others lost fortunes, he profited, cementing his legend. The 1929 crash was his magnum opus. He'd been quietly amassing a short position for months, sensing the market's unsustainable exuberance. When the crash hit, it wasn't a surprise to him. He rode the wave down, amassing a fortune estimated at over $100 million. But his triumphs were often followed by setbacks. He lost a significant portion of his wealth in the cotton market, a harsh reminder that even the best can be humbled. His confidence, however, never seemed to waver. He wasn't afraid to admit his mistakes, to learn and adapt. He viewed losses as tuition fees in the market's grand school. This resilience, this ability to bounce back, is what set him apart from the rest. Livermore's genius lay not just in analysing numbers, but in understanding human behaviour. He believed that the market was a reflection of human emotions, of fear and greed, hope and despair. To succeed, one had to master these emotions within oneself first. He preached patience, waiting for the right opportunity. He warned against following the crowd, emphasizing independent thinking. He believed in cutting losses quickly and letting profits run. His strategies weren't based on complex algorithms, but on timeless principles of human psychology. He often said that it wasn't the thinking that was difficult, but the sitting. It was about controlling the urge to act impulsively, to chase every fluctuation. Successful trading for him was about discipline, patience, and emotional control. Section 4. The High Life and the Heavy Price. Livermore's personal battles. Livermore's life wasn't just about trading. He lived extravagantly, indulging in mansions, yachts, and art collections. He was a man of contradictions, a shrewd trader who craved the finer things in life, a master of risk who sought control in his personal life. He was married twice, both ending in divorce. His personal life was plagued by tragedy, including the loss of a son. These events took a toll on him, casting a shadow over his successes. He became increasingly isolated, his later years marked by depression and financial struggles. The man who once seemed invincible was now battling his inner demons. His story is a reminder that even the most successful individuals are not immune to personal tragedies. Section 5. A Tragic End and a Timeless Legacy. Lessons from the Boy Plunger. In 1940, at the age of 63, Jesse Livermore took his own life. It was a tragic end to a life filled with extraordinary highs and lows. He left behind a legacy that continues to fascinate and inspire traders to this day. His story is a cautionary tale about the dangers of over-leveraging, the importance of emotional control, and the fleeting nature of wealth. But it's also a testament to the power of resilience, the importance of learning from mistakes, and the enduring allure of the markets. Livermore's life, though ultimately tragic, offers valuable lessons for traders and investors to master their emotions, to respect risk, and to never stop learning. His story serves as a reminder that even in the face of defeat, the human spirit, much like the market, possesses an uncanny ability to rise again.